From the SharePrices.com.au studios, I'm CJ Dore with some more stock market education. And what we're going to look at now is our introduction to bar charts, in particular, bullish versus bearish. So let's bring them up and have a look here. And what we've got is the green and the red. Now the green is bullish. Green is good, green is go, green represents upward share price or market movement. And then we've got the red, and red, as always with stock market protocol, is a bit of a warning sign. It's downward share price or market movement. So straight away, let's have a look at the difference between the two. What we've got, obviously, is one vertical line there for both of them, no matter if it's green or red, bearish or bullish. And that represents the total movement of a share price or market movement throughout a day, the highest point and the lowest point. Now, our horizontal lines that come in and out off the sides are read like a book, just as you would open a book and read it across a line from the left to the right. That's the way the market moves. So we start from the left, and the first thing we always have, whether it's red or green, is the first horizontal line coming in from the left-hand side. That's where the share price opened for the day. That's when the market opened, and there things start to move up and down that vertical line from the highest to the lowest point. Then we close off the day on the right-hand side, just as you would finish a line in a book as you would read it. There you've done, and you move back into the start again. Now the difference between the two is, let's go to the green and have a look at the bullish. That on the left-hand side is below the right-hand side line. That's because it opens and goes up and finishes higher than where it opened, right? Of course, that's what makes it a green or up day. Now the same applies as far as the side that it opens from for the red or the bearish. It opens up and we've got our horizontal line there still on the left to start with. But let's have a look at where it ends up for the day. Yes, again, it's on the right-hand side, just like the green, but the key, it's lower. Of course it is. It finishes lower than where it opened. That's why it's a down day or a red day or a bearish day. So let's now have a look at some different formations. And what we've got here is a very small, short bar. Look at the vertical length. It's almost the same there as what we've got with the horizontal length. So what that represents is the total movement from its highest to its lowest is very small throughout a day. So a pretty quiet day on the market, whether it was up or down. But the same applies. Comes in first from the left-hand side and finishes on the right-hand side. Here's another example here. And what we've got, both very long bars vertically. So that's quite a bit of price movement or price activity throughout the day. Big high, big low for the day. But have a look at where those horizontal lines come in for both the bearish and the bullish. They're very close together. So that says that the price starts very close to where it closed for the day. But in the example of the green, it started right up the top there and then fell right away. But the good news is it recovers just like the bearish does. But in this example here, the only difference is whether it opened or closed higher than one another. Now let's have a look. Very similar, but all the opening and closing is done down the bottom. So let's have a look at the green first. Opens, shoots right up, really tests the market up high, just as the bearish chart does, goes right up after it opened, but then comes back down and closes very similar to where it opened after a lot of movement up, and it tested the market up that way, as opposed to the other way around where it opened and then it tested how low it could go before it came back, which is a good recovery. Let's have a look now at some neutral sort of territory, and what we've got again is a very close opening and closing price. But this market here perhaps was a bit volatile during the day. It's a bit of an unknown. It went up, it tested the high, it came down and it tested the low. But again, the difference is whether it opened or closed higher than where it opened or closed for its green or for its red example. So there we go. We've got the bullish and the bearish, and that is our introduction to bar charts. A lot of different examples there, but go to SharePrices.com.au now. Have a look at a bar chart, apply it to a stock you own, become familiar with how it reads and how you can technically understand it. As for now, I'm CJ Dore with some more stock market education from the SharePrices.com.au studios.